Terra and its stablecoin, UST, will be remembered as the apotheosis of the 2020 crypto bull market. As Terra ecosystem began with a simple stablecoin that was being tested, but in only a single year, Terra went from being one of this cycle's best-performing assets, with Luna cryptocurrency and lending protocol Anchor, to see the most stunning collapse in a matter of days. What started as a simple experiment of algorithmic stablecoin quickly turned into a wild ride that took the crypto industry by storm. But how does it happen? In this video, we are going to explain the whole story behind it. The organization behind Terra, called Terraform Labs, began as a decentralized algorithmic stablecoin ecosystem in 2018. To reduce the cost of e-commerce transactions and enable real-time payments, the original plan for Terra was to develop a range of stablecoins anchored to significant currencies. DoKwon and Daniel Shin, two Korean serial entrepreneurs with U.S. educations, were the two founders. Former co-founder of TMON, one of Korea's biggest e-commerce companies, Daniel Shin later left Terraform Labs to run Chai, a Terra-powered platform for Korean merchant payments. Early on, Terra only assisted with payments for Korean e-commerce, practically all of which came through Chai. But once DeFi took off in the summer of 2020, DoKwon had the light bulb moment to realize that he could build a native DeFi ecosystem around UST, Terra's USD-pegged stablecoin, by upgrading the Terra blockchain to allow smart contracts. The biggest stablecoin on Terra up to that point was KRT, which was linked to the Korean won. This tactic was unquestionably defective. Through 2021, Terra experienced a meteoric rise in popularity and was one of the best-performing assets, increasing from $0.63 to $91.38 in just 1 year. And at the start of March 2022, Terra flipped Solana to become the biggest Layer 1 alternative of Ethereum. Anchor, the top protocol on Terra created by Terraform Labs, was at the epicenter of this dramatic expansion. It began as a straightforward concept for a money market that would take USD and yield-generating assets as widely available staking derivatives, similar to staked Ether. Due to the passive yield generation of the staking derivatives, this yield was recorded by the protocol and used to lower the current interest rate provided to depositors. In addition to this, the protocol chose a predetermined goal yield for depositors rather than paying the market rate, which was Anchor's most significant and contentious aspect. Since the beginning, this rate has been set at about 20%. Anchor donated additional interest payments from an on-chain reserve of UST that was funded by Terraform Labs to reach this return. Because of the high DeFi interest rate at the time, this was largely sustainable in the early days of Anchor. But Anchor didn't change its rate as the overall DeFi yields fell in the summer of 2021. This increased the appeal of Anchor's 20% guaranteed yield. As the year progressed, Anchor's 20% steady yield was far more than the standard stablecoin yield, which often hovered around 2%. Additionally, deposits on Anchor exploded, expanding independently of loans. By total value locked, Anchor finally became the single largest lending protocol in the whole DeFi market. And then another small ecosystem of neobank businesses arose, used Anchor as their backend to provide their consumers a minimal income of 20%. Additionally, we started to notice Anchor SPVs that advertised a 20% yield while accepting funds from family offices. And considering you don't know what were SPVs, let us explain that these were a type of investment vehicle used to invest in fixed income assets, such as bonds or loans, to provide investors with exposure to these assets while mitigating certain risks. This led to the creation of an increasing number of UST, which were then placed into Anchor in exchange for the UST yield. At its peak, Anchor held more than $14 billion in UST and served as the sink for nearly all of it, promoting UST to the third largest stablecoin in the crypto world. But was it enduring? It is obvious that a 20% yield on more than $10 billion in UST, which is more than $2 billion in interest payments annually, could not be paid out entirely through interest paid by borrowers. on-chain yield reserve was required to cover the discrepancy. However, the yield reserve was rapidly depleting as the UST deposits increased. Due to a declining on-chain reserve in February 2022, DoKwon was compelled to quickly recapitalize the reserve with $450 million of UST. And this dynamic was ultimately responsible for UST's ascent. However, we may claim that Anchor was the cancer that fueled Terra's explosive expansion. It was rabidly hungry, and as a result of its demands for food, UST became the stablecoin with the quickest rate of industry-wide growth. Additionally, the role of Three Arrow Capital and other capitals or funds in the collapse is still unclear, as there are conflicting reports and opinions on the matter. Three Arrow Capital was an early investor in Terra Luna and reportedly held a significant amount of the platform's native token, Luna. Some reports suggest that Three Arrow Capital may have contributed to the collapse of Terra Luna by selling off a large amount of Luna tokens, which triggered a chain reaction of liquidations and forced selling by other traders. Other capital and funds, including Alameda Research and Jump Trading, have also been linked to the collapse of Terra Luna. These firms are known for their involvement in high-frequency trading and algorithmic trading, which contributes to market volatility. But talking again about Anchor, one question which pops up is why? Why would you do something if it was obviously unsustainable? Why did they not stop it sooner? The justification for Anchor's yield was straightforward. Anchor was necessary for the widespread acceptance of Terra and its primary stablecoin, UST. New developers and projects were drawn to Terra as a result of the rise in Luna price and the reflexivity of UST growth, which strengthened the cycle. It was asserted that the yield was merely a customer acquisition expense that had to be covered until UST became the industry's preeminent stablecoin. DoKwon had created a cult of personality around himself, openly criticizing doubters and denying sustainability claims. However, Anchor was now a necessity for the Terra community. There was no way to unwind it. In addition, Luna's market capitalization, which at the end backed UST, was greater than 2 times that of the outstanding UST supply. In conclusion, it was asserted that even at this rate of growth, UST was safely over-collateralized, but it's crucial to comprehend the second component of UST, such as how it was established and redeemed, to comprehend how everything ultimately came to pass. You can therefore think of Terra as a central bank, as it had assets like Luna, the native coin of its blockchain, and liabilities like USD. The sole objective of the central bank was to maintain a constant $1 price for UST. To achieve this, it effectively market-made UST, exchanging 1 UST for $1 worth of Luna, whose price it kept track of via an on-chain oracle. As a result, an arbitrager may burn their UST for Luna valued at $1 if the price of UST was $0.99. An arbitrager could create extra UST with just $1 worth of Luna if the price of UST was 1 cent higher. Both of these mechanisms ought to cause UST to quickly re-enter the peg. All of the Luna that the protocol owned served as collateral for the value of all of the outstanding UST. Additionally, as UST supply increased, broader worries about the expansion's systemic risk grew. To allay these worries, Terraform Labs established a brand new non-profit organization named the Luna Foundation Guard to support the UST peg. As a result, LFG raised $1 billion in a deal that was co-led by Jump Capital and Three Arrows Capital to create a Bitcoin reserve and diversify UST's funding sources away from sole reliance on Luna. This was in addition to the 72 million Luna it had received before. To support the UST reserve, LFG made a public purchase of over $3 billion worth of Bitcoins to increase that amount to the total of $10 billion. This Bitcoin reserve and enormous amounts of Luna were therefore added to the reserve. The Terra community was quite certain that its so-called central bank was now indestructible due to its enormous wealth. However, the ratio of Luna to UST market value swiftly decreased as risk assets and the cryptocurrency markets started to drop in early Q2, fueled by concerns about inflation. The turning point in this slide occurred on May 9th. A couple of significant whales pulled sizable positions from Anchor in response to a bigger macro sell-off and dumped their UST through Curve, the biggest on-chain decentralized exchange for UST. Each sale, which was several $100 million in scale, knocked UST off its perch. Panic was sparked by this. The number of users on Anchor who withdrew, then redeemed their UST for Luna, and then exchanged the Luna for cash rapidly increased. In a matter of hours, Luna market capitalization dropped from $22 billion to $11 billion, exceeding the requirement for 100% collateralization. And just in a matter of weeks, Luna crashed from 3 digits to below $1 and UST, which was supposed to be a stable coin, went below 30 cents, and then even lower as markets responded violently. Anchor depositors scurried for the doors, and a complete bank run followed. But still, after this huge collapse, DoKwon and Luna community don't want to give up, so they come up with Luna 2.0, a newer and better version of Terra Luna, and turned the older version into Luna Classic. Luna 2.0 is a major upgrade to the original platform, with significant changes in its consensus mechanism, user interface, and development tools. In terms of the future of an ecosystem, Luna 2.0 will likely become the primary platform for developing decentralized applications and smart contracts on the Luna blockchain. However, Luna Classic will likely continue to exist, and some developers may continue to use it for specific use cases. So that's the end of the video around everything about Luna ecosystem collapse. Now, if you have found the content helpful, don't forget to give this video a like and subscribe to our channel for more content like this. Thanks for watching and see you in the next video. Until then, goodbye.